You can start.
Thank you very much. Good afternoon, everyone, and welcome to BDO's Renewable Energy webinar. I thank you for attending, and I hope you have a learning experience and that you leave enlightened and encouraged for what is lying ahead in the renewable energy space. I come to you from Johannesburg, very sunny. I think everyone that's there would experience the heat, but we are surviving. So what we have today is a webinar on renewable energy, and it will be the first of a couple in a series. There will be recordings available and some articles written on the content that has been discussed. So please, once the webinar is finished, please go to the chat. You will see a link to our LinkedIn profile. Follow us there, like the content, share the content, and be up to date with any future webinars or future articles that we'll be posting for your interest. Just a quick introduction to today's agenda. We will be talking about REIPP and the role it played in forming the renewable energy sector in South Africa. Then furthermore, looking at the current progress and development of the local renewable energy sector, and looking at the panelists' views on the bankability and return on investment of the projects in market and those to come. And on that note, I would like to introduce the panel to you and just give each of the panelists a quick opportunity to introduce themselves and just say something about them before we kickstart the event. So on that note, Don, if you can maybe introduce yourself.
Hi, good morning, everyone. I'm Donald McGillivray, a director of the Africoast Group of Companies, and more specifically, Africoast Investments. I've been involved with renewable energy project development since the early 2000s, where we commenced with the integrated energy planning for the Nelson Mandela Bay Metro, and then worked together with CEF, Central Energy Fund, to look at renewable energy interventions in those early stages before REIPP to be able to generate and trade energy. And with that, we were involved with the formation of an energy trading company, which is now PowerX. In those days, it was the Amatola Green Power. But we looked at a wide range of early stage renewable energy projects, and it was kind of bleeding edge days because there was no renewable energy program in South Africa. In about 2005, then the program in South Africa introduced the refit guideline tariff, and all the small sort of projects we were involved with had to fall under this refit program, which became the REBID, or Renewable Energy Bid Program, and then eventually that led to the REIPP program. And a number of the projects that we were developing fell under the Bid Window 1 project. Just before that, in 2010, we erected the first fourth generation wind turbine for Electrowinds in the Kuche IDZ, which actually then wheeled energy through Amatola with the wheeling agreements we had established and the generation license from NERSA to wheel green power to the FIFA 2010 World Cup Stadium in Port Elizabeth. But in the REIPP project, we had in Bid Window 1 3 successful projects that reached financial close and started generating electricity. And John is director of one of the companies and operating and managing that as well. After Bid Window 1, we closed another wind project in Bid Window 3, and then reinvested in a whole pipeline of renewable energy, wind, solar, and hydropower projects. And then we're part of the carnage with the stalling in the REIPP program from 2015, and are now currently involved with a pipeline of just over 7.5 gigawatts of renewable energy, wind, solar, and hydropower, largely for green ammonia production and for the Kuche green ammonia project, as well as one or two other green hydrogen and green fuel projects. But yeah, that's a nutshell.
Thanks, John. Thanks, Don. And John, maybe over to you while Don mentioned you.
All right, great. I think Don gave most of the background for all our stuff. I'm with Africoast. I'm involved a lot more on the operational side than Don. So I'm Managing Director of Africa Coast Energy, where we develop, operate, and act as owner's engineer for a number of different renewable energy projects. I'm the Managing Director of the Metro Wind Van Stadens Wind Farm, which was the first wind project in the Eastern Cape in REIPPPP to get to financial close. I mean, well, not financial close, but to actually get to commercial operation. And yeah, it's been operating for almost 10 years. So been quite a bit of experience and things on that. I was the technical director of Amatola Green Power, where we set up all the format for energy trading. We developed the first customer and generator PPAs along with RNI and a few others, and got those approved and passed, and different mechanisms for Nelson Mandela Bay to allow us to wheel the power to different customers. So yeah, all that stuff has been happening since 2010, 2012. And it's now all coming into fruition and actually happening. And then, yeah, we also help government quite a bit on different things. We've developed the Upper Blinkwater mini grid, which is the first successful off-grid project, which is now seen as a blueprint for rural electrification, which is going to get rolled out in the near future. But yeah, so it's just great being on the pioneering edge of renewable energy in this country. So exciting place to be.
Great stuff. Thanks, John. Yassine from Investec, welcome to you as well. Maybe a quick introduction for our audience.
Oh, so good morning, Nato, and good morning everyone online. It's a great pleasure to be here and to share some insights. So my background is finance. I'm a project finance person and I have a finance background. I am currently at Investec within the Power and Infrastructure Finance business unit, and our mandate is to fund infrastructure on the African continent. A big part of that infrastructure mandate is obviously energy, and given the current sort of decarbonization environment we find ourselves in, you know, that's a significant portion of that is renewable energy. I also have quite a strong renewable energy background. So I've spent some time, you know, at Old Mutual. I started my career at Old Mutual within various sort of financing streams, and found my way to project finance, where, you know, I've been involved in from the earlier round sort of financing projects in the government program. I then went to a German greenfields developer and spent some time there, so selling projects to independent power producers that are fully permitted. And then I went to a Norwegian independent power producer, Scatec, and I managed their project finance function in the sort of government procurement space, but then also that was really at the outset of you know, private procurement. So it was an exciting time to join them. Yeah, and really happy to be here and share some insights with you, and hopefully I can share some insights on, you know, from being on both sides of the equation, as it were.
Thanks, Yassine. And then our own Anthony van der Hoek from BDO BSO.
Thanks. Hi, Nato, and hello to everyone. Nato, just my background, I'm a chartered accountant like yourself, and I head up the BSO, which stands for Business Services and Outsourcing Division in Cape Town office of BDO. And I'm hoping to share with everyone how we can add value and bankability in terms of projects from a kind of back office perspective. After all the engineers have done all their work, how we can be supporting businesses, and particularly in the complexity of joint ventures, etc., on finance, accounting, and other services. Thank you.
Thanks, Anthony. I see some activity already on the chat. I like that. On that note, if there are any questions, please feel free to ask. You can post those questions in the chat. We will have a nice Q&A session at the end where the panelists can address any of your questions that you may have. And obviously a recording of the webinar will also be available subsequent if you would like to share your question being answered with anyone else. On that note, I think we can kick off. The background has been set, and I think we're all quite excited for the panelists. I think what you will experience is based on the introduction. There's a vast amount of experience on this panel, and we really look forward to the insight that they will share with us today. Setting the scene for our webinar today, we just want to quickly mention some background on REIPP. So I believe most of the participants in the call today, or the webinar today, would be familiar with REIPP. But just to set the scene, you know, REIPP really helped our local industry in South African renewable energy to attract both local and international investors, developers, and financial institution interest. And from that, obviously, that led to development of skills in the renewable energy sector in South Africa, which we definitely needed. And it's still contributing to the development of those skills within South Africa. And with both this interest of the investors and the skills of the developers, what we're seeing in the market at the moment is that there are private developers taking place, private PPAs that are able to be signed because of the deregulation from government. So we're seeing nice movement in the renewable energy sector, and we hope to carry that momentum into the future, and excited about what will happen in the industry in the coming years. But obviously, as anything, there were challenges, and there are still challenges, both within REIPP, within the renewable energy sector itself, and potentially within regulation as well. But we will touch on that as we go through our webinar today, and the panelists will give their views on that. So on that note, Don, you're first up on the list. I think everyone understands, as you mentioned, you've been involved with the renewable energy sector from the early days, really pioneering the industry in South Africa. Maybe your view from what you've seen in early days within the renewable energy sector versus what you're seeing now, touching on obviously the type of renewable energy that you're seeing being developed, as well as the method in which it's being developed. We would like your views on that.
Yeah, thank you, Natu. It's been a really absolutely fascinating and exciting field to be involved in from the early days. I mean, in 2010, when that first wind turbine fourth generation wind turbine went up in Kucha, and getting involved with solar projects. I mean, we visited the largest solar PV project in the world in Germany in about 2012, which was a 52 megawatt a solar power plant there. The next year in South Africa, and Yasim would have been involved if we was with Skytech, there was South Africa under the bid window 1 of the REIPPP program was rolling out 4 75 megawatt solar farms concurrently in just bid window 1, with a number of wind energy projects, you know, ranging up to 140 megawatts, and that was the biggest, you know, renewable energy rollout globally at that stage. We're here in South Africa with the initiation of REIPP, and by the third bid window, there was over 200 billion rand of private sector investment that had flown into the economy, and it was known as the most successful renewable energy, you know, bid program globally in the world, with you know, support from GIZ and the government, and it was an incredible program, and it was just powering ahead. There was load shedding, you know, started, and it was, the program was accelerated with this, you know, the expedited bid round and increased capacity, and yeah, then it kind of brought to was halted with various, you know, challenges. But what happened is from bid window 1, developers and IPPs looked for capacity in individual substations and built a 140 megawatt wind farm around that, and or a 75 megawatt solar farm. There were these individual projects built around where there was a resource available, where there was grid connectivity available, and where the project could get permitted. So in terms of getting an environmental authorization and all the permitting process. But what happened very quickly how the program worked in terms of getting a grid capacity. One would submit a cost estimate letter to Eskom and get a positive cost estimate letter. Once one achieved a preferred bid status, you would then apply for a budget quote and pay the budget quote fees and get the project developed, and get the connection to the grid. But what sort of happened during those years with the stalling at that 5-year window, Eskom couldn't be proactive. They only reacted on cost estimate letters. So if there was one substation which had capacity for a project and 10 project developers started developing around there and applied for a cost estimate letter, every developer would get the same cost estimate letter saying, yes, connect into this substation, install these transformers, and the projects developed. And a project started once grid capacity, and then if at a bid stage, when a bid window opened, if all developers submitted a bid, there's only capacity for one developer. So it was kind of, and when substations got capacity, got full, you needed bigger projects to be able to afford the deep grid connection costs. So projects sort of scaled from individual projects to clusters of projects, and very quickly, even from a cluster of projects to a renewable energy node, where whole clusters of clusters. And CSIR undertook the study looking at various renewable energy development zones, and there's big projects happening in those. It's what's very common now is to be able to connect into a high voltage grid, 400 kV grid or 765 kV network, requires gigawatts, of projects. And most project developers, particularly big international developers, are developing whole renewable energy clusters with mega projects. And with the deregulation that Natu referred to, and with the inability of Eskom to be able to provide electricity to business, commerce, industry, the mines, and the heavy industries, and now a number of energy aggregators or energy trading companies have been established, which allows much more flexibility in the market for buying and selling and aggregating renewable energy to meet various customer profiles. But the biggest challenge, as Natu referred to, is the lack of grid capacity and Eskom have just recently, a few weeks ago, released the grid connection capacity assessment report, which looks at grid capacity in the country and identifies the lack of capacity and what needs to be done to be able to evacuate more power into the grid. So there are thousands of stranded assets currently that cannot connect, that are fully permitted and cannot connect to the grid due to insufficient either transmission or substation capacity or grid capacity. But those now are starting to be unlocked, and there's funding available through the Just Energy Transition, the BII, and various institutes to be able to have a massive rollout in augmenting and increasing the grid capacity to enable more renewable energy to be evacuated into the country or into the grid. Also, there's a swing to direct, looking at where possible, avoiding congested Eskom grids, to be looking at direct connections from a solar PV or wind energy facility direct into a load or a center. So it's been the biggest challenge has been grid. Other challenges in areas, particularly for wind, has been the onerous sort of bird and bat monitoring studies that take a long period of time, and with additionality have posed some challenges. And then the other one that Natu referred to, with the oversupply of projects, with the competitive bid process really driving bid prices down, and some delays. A lot of IPPs were, projecting price low, continuing to fall in solar PV. Manufacturers and the supply of solar PV projects, and then those projects actually, or module, there was price increases, and it affected a number of projects getting to financial close. So it's quite a volatile space, but there's a lot happening, and yet the market is so bullish. There's because of the global demand need to decarbonize, and South Africa's abundant renewable energy resource, both in the form of solar and wind, and the good combination of the two, enabling electricity to be produced at a competitive price to generate green hydrogen and green ammonia and other green fuels, for which there's a global demand, has meant that there's a number of strategic investment projects looking directly at producing these green hydrogen related products for global export, as well as the demand for renewable energy and green energy way exceeds South Africa's shortfall, and there's a big global demand, which has attracted a lot of large-scale development projects, and there's numerous projects in the gigawatt scale rolling out all over South Africa. I'll be open to any questions later, but just to set the scene for that. Thanks, Natu.
Thanks, Don. Much appreciated. I think probably a question before I go to John is to say, what do you think is the biggest challenge at the moment for REIPP specifically in South Africa?
I think the biggest challenge, is definitely on the grid access to the grid, and because of the almost massive or unprecedented shortfall in grid capacity, which I think it kind of caught Eskom a bit unprepared. It's meant there's new queuing rules, and there's confusion, and the amount of investment that needs to be done on a renewable project before it can get a grid connection agreement. That's probably some of the biggest challenges, Natu.
Thanks, Don. John, you're obviously very active on the ground and being involved in a couple of projects. What are the successes and challenges you've seen over the last couple of years in implementing REIPP and other private renewable energy projects?
Okay, no, fantastic, Natu. Thanks so much. Just to add on to that last question you asked, Don. One of the biggest challenges I think coming from REIPP is the bidding process. It's in itself. I mean, effectively, you've got to have a totally developed project, financed, ready to build, and you spend 20 to 30 million on getting the project to there. Then you go into a competitive bidding scheme, and if you're unsuccessful, all that money is wasted. If someone else bids a quarter of a cent less than you, and they're connecting in at the same point in the grid capacity is gone, and you lose that project. So there's a huge amount of investment, 3-4 years worth of work to get it to a biddable stage, and it's kind of a lottery at the moment. You've got almost 10 times oversubscribed for each of the different bidding rounds. So that's added a lot of challenge in the REIPP, and that's why a lot of people are looking and moving more into the C&I space, or into generation for self-generation, or having a project where they need power, and bringing it in like your green hydrogen projects, where they're actually making sure they've got the generation for the consumption, everything they need. But just wanted to add that, but I'll pop back into your question on the operation and that of renewable energy. It's been an amazing road. yeah, when we started the REIPP process and got announced as a preferred bidder, the port wasn't, the ports didn't know how to handle the influx of turbines and then how to offload the turbines. So we first had to develop lay down areas and mechanisms to get the turbines down to be laid down on site, and then do route studies to try and see how you can move your equipment across to your different projects. I mean, you're sitting with blades that are sort of 60 to 70 meters long, which you've got to transport across the roads there. The diameter of where it connects into your hub is 5 meters, and a lot of places our bridges were too low to get them across, so you had to do different route studies to get it across, widen intersections, everything to get the blades across to different areas. So from that side, there was a huge amount of development that happened in the beginning. It's now getting a lot more old hat, and we've in a great space now because projects can come and flow. Everyone's used to all the different things, but it meant that the initial projects paid quite large school fees. And it was a good thing from the bidding process from that aspect, because it allowed for a higher price in the beginning, and that price has been reduced dramatically. So, I mean, solar's gone down from R2.50 per kilowatt hour to bidding rounds of 50 to 60 cents a kilowatt hour. Wind started off at a cap of about R1.15 and got down to us around about 60 cents. So the price came down. So REIPP did a huge work to bring the prices down. And now we're sort of leveling off on those costs and prices. A lot of people ask, does Eskom pay for the power? I must say, from the REIPP projects, we've never ever had a default in payment, so that is fantastic. I sit there and manage the Metro and Van Staden's wind farm, which is one of the smaller wind farms. It's only a 27 megawatt wind farm, but size and scale makes such a difference in different projects. So some of the larger projects which I assist as owner's engineer and work with on those ones, if you've got a turbine going down on a 140 megawatt wind farm, it doesn't really impact your production very much. But if you've got it going down on a 27 megawatt wind farm with 9 turbines, you're losing about 12% of your production. So you've got to take those things into account. You've got to meet your payments on a monthly basis back to your lenders. The wind resource is very, very variable and changes from season to season, year by year. When we started, we had this opinion that you'd put up a project and it would run for 20 years, and kind of each time the wind blows, you'd just hear ching, 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 ching. But it's a totally different thing. You've got to keep things running. There's continual maintenance. You've got a massive piece of machinery sitting 90 meters above the ground in some of the worst conditions, because you're looking at the windiest, worst places to put the turbines, because then you get the most production. If you have a problem, a generator going, issues with the gearbox, something like that, you've got to bring a crane on site for doing that, and you've got massive establishment costs for bringing the craneage, and there's a huge shortage of cranes and that sort of stuff in the country, depending on what the time is. And that's so the other challenge from a competitive bidding or REIPP thing is all the projects are they're all awarded on the exact same date. So when 6 months before, there's a total oversupply of trucks, cranes, everything else to move it, but everyone wins their contract on the same day, and everyone needs to suddenly now have the cranes for erection, your massive transporting trucks to bring your blades, your nacelles. I mean, a nacelle weighs around about 100 tons, so you've got to have some serious equipment to move that across onto site. Yeah, but it's been fantastic. Eskom has been good. the projects, you know, we went through challenges, especially COVID time, with trying to get parts and equipment brought across from overseas and that sort of stuff. The cost of shipping has gone up, you know, at least 5 times what it used to be prior to COVID. So that's added to a lot of unknown expenses, and it's a time and thing of transport. But generally, the operation has gone well. All the projects also give back a huge amount to the communities as well. So built into REIPP is your social enterprise development and your economic development. And the rules were about 1.5% in the earlier projects, went up to around 2% of your gross revenue. So a small project like Metro ends up giving over R1 million a year, gets reinvested into the area just on SED projects, and another $500,000 on job startups and other things. And that continues for 20 years. You get a bigger project like your Coca wind farm, or you get into an area like Cookhouse, where you've got almost 2,000 gigawatts in a small farming community, and the amount of investment that goes into those communities and the amount of good that can be done is phenomenal. So yeah, there's a lot of great spin-off that's happened.
Now, thanks, John. I think what I'm hearing is that a lot of lessons have been learned over the last couple of years since REIPP has been implemented, but the progress that has been made both in developing and practically managing renewable energy projects has significantly improved, and the impact that has on both the economy and on the social economy is massive. So that's always good news. I think maybe, Don, if I can jump back to you. I know you touched on it earlier, specifically referring to green ammonia. What are the other opportunities you see in the renewable energy market at the moment? I think most of us obviously are very aware of REIPP. We know that there are private PPAs that's being signed and projects being developed out there. Maybe if you can touch on that, some of the projects you've seen and some of the new energy you see being developed in the market.
Yeah, thanks, Natu. Maybe just thinking about the question. So South Africa producer has had a power or a gas to liquids program, you know, through Petro SA and Sasol, and have been producing aviation fuel and other fuels from gas and coal. They also had a coal to liquids. And although those projects were really strategic in terms of when there was, you know, South Africa was an island in the current global economy, and also with the CO2 emissions. I mean, with Sasolburg is the single largest CO2 point source polluter in the world. The carbon footprint from generating coal to liquids and other, you know, gas to liquids and producing those aviation fuels has a big carbon footprint. So yeah, with green energy you can create and green energy, you can create hydrogen, and with a carbon source, which we have an abundant carbon source, whether it's through biomass and alien vegetation eradication programs, which currently, like working for water with Dutch funding, are chopping down, you know, millions of hectares of alien invasive black wattle and acacia cyclops and other species. That carbon is being left there, but if it can be gasified and then combined with green hydrogen, you've got green hydrocarbons, green fuel, green methanol, green sustainable aviation fuels. So Sasol also has been, and there've been tenders out from Sasol recently, of, you know, 400 megawatt tender, and they're looking at about 10 gigawatts of renewable energy to green their processes and to reduce the carbon emissions. That's not decarbonizing it yet, but and then private sector, we're involved with a current project where we're looking at generating green methanol and there's a lot of sources of carbon, and then also industries such as the cement industry and the and steel industry are big sources of carbon emissions and have to decarbonize. So the hydrogen economy will play a big role in decarbonizing those big industries, steel and cement. And then the other, sort of use case for green ammonia and the other big carbon emitters globally and locally is in transport, but particularly in aviation. You can't put a big battery in and that's powered by renewable energy and have a big jet plane flying into New York. You've got to look at other sustainable green aviation fuel. So sustainable aviation, all four global aviation companies are looking at hydrogen as a fuel source and combinations to reduce the footprint. But the lowest hanging fruit currently is sustainable aviation fuel production. And then shipping. I mean, shipping has global shipping, and with all the, it's just increasing, and with the current fuel source has a big impact in terms of carbon emissions. And the shipping is going to have to transport these large quantities of green hydrogen or more earlier stage green ammonia. So the shipping industries are looking at green ammonia as a fuel source, along with other green fuel sources. But with that, you need bunkering facilities for green ammonia, and then you need so there's a really good and strong use case for the green energy or green electricity or renewable energy to be able to decarbonize either through just straightforward green electricity production, but also to generate and lower, for example, the coal emissions for using electricity. But for example, in the cement industry, we produce over 48 million tons of cement locally, and that's converting calcium carbonate, which is CaCO3, to CaO, quicklime, for cement production. And the CO2 is emitted into the atmosphere. And so carbon capture and storage of those CO2 emissions that could be used as carbon. And the carbon, which is a waste resource, is actually an input and a valuable resource for creating hydrocarbons. So it's really about looking at a cost-effective and competitive circular economy and waste, which we're currently wasting, is only waste if it's wasted, but it's actually a resource and an input material for producing something that has a need and a demand. And if it can be done with a lower impact to the environment and to lower our CO2 emissions and carbon footprint, that can really build the economy in South Africa and achieve areas of eradicating alien invasive species and lowering cost of production as well.
Great stuff. Thanks, John. No, thanks, Don and John. This really is interesting, and I think I see already quite a couple of questions coming through on the chat, which we will address a bit later. Definitely a couple of questions you guys will be able to assist with. I'm going over to Yassine now from Investec. Probably the first question I'll ask to you is, where's Investec's focus in renewable energy and why? The type of funding structures you are busy with and you're doing in the market, and the type of projects.
Cool. Thanks, Nato. I think maybe I'll start by answering this question, just giving a bit of background to Investec. So Investec, as you know, is one of the 5 commercial banks in the country. It's the smallest of those 5 banks. Because it is a private bank, and you need to sort of meet certain criteria or qualify in order to become a private bank account holder. I think the last I actually checked, we had around 100,000 private bank account holders. And I think that gives you a sense of the scale, of our balance sheet, and it's an important context because it will give you insight into how we have to sort of use our balance sheet more effectively and deploy capital. And I think it gives you a sense of sort of the context and the operating environment and how we then deploy capital on the back of that. So I think moving out of sort of the transactional banking space, we have a number of specialist lending areas within the bank, power and infrastructure finance being one of that units, and that's the business unit I belong to. And I mean, I touched on it a little bit earlier. Our mandate is to fund infrastructure on the African continent, and renewable energy obviously being a big part of that. And as a bank, we also have, I mean, we see significant deal flow in this part of the market, in line with sort of the decarbonization goals of the broader economy. And we play, across the capital structure within renewable energy. So not only do we provide debt investments into projects, we can also take equity positions, which is fairly unique. And in fact, we've got a long history in providing equity in renewable energy projects, and we've done some meaningful work in the REIPP space. So in the earlier rounds, we co-developed, a couple of projects with an international IPP, and saw those being awarded under the REIPP program and then sold out in the secondary market within the operations phase of the project. And then on the debt side, we can do a range of sort of products, so we focus on limited recourse funding, project financing, because that is, I guess, the typical structure of financing that's used in these sort of projects. But we are able to provide a number of other products, debt products. We can look at sort of corporate finance, merger and acquisition finance. So we really are well skilled to do a number of play a role across the capital structure. And then in terms of the sort of projects we look at in the renewable energy world, we technology agnostic, so we can do almost any technology within the renewable space. In terms of sort of the spectrum of opportunities, we look at both public and private procurement. So, there's no real key focus on one particular area. I think we've touched on sort of the challenges that the public procurement and REIPP space faces. And we certainly, I share the same view as the guys here, but I do think it has a role to play in the coming years. It still is going to be a meaningful part of the portfolio. And we will continue to support REIPP and continue to support our clients who choose to bid in REIPP. I think there is still a market for it. But having said that, on the private procurement space, that is certainly an exciting area. We've seen significant activity here in sort of the last few years. It's an exciting space, right? So it's opened up a whole world of new opportunities, different type of structures, different type of opportunities that are non-traditional if you look at it in relation to REIPP. I think we'll touch on to sort of later on in this discussion on all the different elements of the market. But one thing I'd want to sort of touch on right now is sort of our key focus on, as I said, we play across the private procurement space, but one area that we strategically decided to invest in was the small scale embedded generation space. So this is your behind the meter rooftop ground mounted solar PV solutions. So I think sort of 6 or 7 years, could be even longer than that, ago, we decided to project finance or limited recourse finance these type of projects, which is quite unique. This, I would say, is typically an underserved market, like traditionally. On a project standalone basis, the sizes are too small to warrant limited recourse funding. And the developers, they probably don't have the requisite balance sheet to attract corporate financing. So typically they would, get equity financing or venture capital funding, which may not be, the most optimal funding solution. So I think we looked at sort of, the role that small scale embedded generation has played in other markets, and then also started to look at these opportunities on a more portfolio basis and understand sort of there's there's a lot of diversification in those off-takers and can help sort of mitigate some of the credit risk that you face that's inherent in these type of opportunities. And on the back of that thinking, we started to roll out project finance structures for these particular opportunities, which I would say we were the first bank in the country to do so. And, we've built a successful small-scale embedded generation sort of mini business within our business. And the clients that we've supported have grown substantially. So I think that's quite a meaningful story. And I think it really is testament to sort of our commitment to the private procurement space as Investec.
Thanks, Yassine. I know, what you mentioned is that you guys both look at REIPP and private sector, which is great. You touched on, the embedded projects. Is there maybe a certain sizes or natures of renewable energy that you prefer to focus on, or are you open to look at all applications, covering different size of projects, different types of renewable energy sources? What do you currently have in your portfolio?
Yeah, I think there is no set criteria, I would say, in terms of size and technology. We're quite open. Like as long as you're financing something that is technology, right? So you got to make sure that it stacks up, that it actually does what it says it's going to do. So as long as that sort of ticks the boxes and, is a proven technology, there's reference plans, you're able to kind of take a view on the technology, that's okay. And then in terms of sizes, I think the way we've approached the small scale embedded generation space is quite interesting because it gives you I think typically those sizes of projects are too small for limited recourse funding. Banks typically shy away from that and would rather take a view on your balance sheet as a developer. And I think the fact that we were able to tap into that market using a portfolio structure is testament to the fact that, size, we can play in the smaller size. We've participated in REIPP on the mega projects. I think Don touched on it earlier, like given sort of the grid constraints, we're starting to see, and I think the deregulation, of sort of the generation license application procedure removal. I think those two things coupled has almost resulted in projects being, you're seeing mega projects come onto, like in order to sort of justify the grid infrastructure costs. Sometimes you see significant projects and it's, and we can participate there as well. Obviously, given the size of these projects and the actual cost and capex required, it's probably not a one bank deal. It's going to take a few banks to club together. And I think that's also been quite interesting because what we're seeing more and more of now is actually collaboration between the banks and sort of, you build relationship with the banks and understand that you need to do this together. There's a common goal and I think you also alluded to it earlier. Sort of REIPP has been around for a long time, and it's almost created an industry. At least it's created skills in this environment, and there's a common understanding of the risk profile, of renewables and how to mitigate and structure around that. And I think that you can see through the banking space. Like I think banks kind of think about the risk and how you mitigate that and how you structure that. More or less the same. So I think that's kind of how you mitigate around the increasing sizes.
Thanks, Yassine. I think probably some of the guys on the call might be wondering, if they ever want to approach Investec or a different financial institution, what are those minimum compliance or criteria that you are looking at before you would, entertain the application and potentially walk the road with the developer?
Yeah, again, a really challenging question to answer because, in every single, especially in this private procurement space, we're seeing a lot of unique different structures, and that requires different considerations and different thinking, so it's quite difficult to put that in a box and say, this is the way we will assess every single financial application. Like I think it's a little bit of a tough thing to do, but what I would say is that, look, firstly, from in terms of how we can speak to clients, as a bank, we are quite open to kind of engaging with clients, understanding what they're doing, what the opportunity is, how we can then partner with them quite early on, and then sort of, look at at offtake strategy, help them with the bankability of a project, and make sure that it is, you know, commercially bankable. And I think that's quite an important point, because, you know, I think there needs to be some, you need, as a bank, you need to sit with your clients and kind of, you know, sort of help them through that process, that thinking, that structuring, especially sort of clients who aren't used to bidding in REIPP, for instance, or the large international IPPs. So that's on the one end. I think, to answer your question on sort of the framework, I'll always come back to, you know, project finance principles. I think if you look at sort of those basic principles and build on that, that's something that I think, you know, is always the fundamental sort of building blocks to how you can structure a project. So you'll always look at it the same, but there will be certain aspects to a project that require unique thinking or nuanced thinking. But if I had to sort of give you a sort of framework, you know, from a project finance 101 perspective, you know, in effect, what you're doing with limited recourse financing is you're financing a set of cash flows, you know, and this, as opposed to taking a view on a balance sheet from a shareholder. So these cash flows are forecasted over a period, and you need to ensure that they are predictable and stable. You know, so that's the first point. And then there are a number of things that you need to check or make sure are in place to ensure that these cash flows are in fact stable and predictable. I'll touch on a few because I think these are the most important ones. But as I said earlier, you're really financing a technology, right? So you need to ensure that you understand this technology, that it's going to do exactly what it says. You know, like, and it's really important here to get the right advice from consultants. At Investec, we have, you know, and a really senior engineer as part of our team who helps us sort of dimension that technical risk, which I think is probably the most important risk in sort of renewable energy finance. The second thing is you're building you know, something that's, or you're financing something that's going to be built. So you really need to ensure that the construction will happen according to spec, on time and within budget, you know, and really important to deal with reputable contractors here, and governed by a construction contract that allocates risk appropriately. Then this thing needs to be operated for 20 years, you know, so you need to have a strong operator who has the track record and experience to do so. And then finally, I would say one of the other big points is, you know, the off-taker. You're relying on them to pay the tariff. And especially as we move into this private procurement space, is the off-taker creditworthy? You know, will they be around for the period of the PPA? And if not, is there a market for other off-takers or to sell the power to? For instance, the Southern African power pool, is that a viable option? You know, are the traders a viable option? That sort of thinking. And then overarching this entire thing is, you know, project finance is literally documented by contracts and governed by contracts. And there needs to be a strong contractual framework that allocates risk to the party that's best placed to handle that risk. And I would say that is sort of the fundamental building blocks. And I'd build on that depending on the opportunity set and discuss it with the client from there.
Thanks, Yassine. I think you already touched on a couple of points I would wanted to make, but you describe basically the risks that you see in the projects and the various projects, and how a financier or bank would see that. On just maybe on a final closing note from your side, what do you think are the constraints currently in the industry that you would like to see changed or re-looked at to help, you know, everyone come together and accelerate a renewable energy investment?
Yeah, I think, look, I won't spend too much time on the REIPP side of things, because I think it's really been covered well by Don, just on sort of, you know, I think the big issues is the grid, which is not really a REIPP thing, but you know, it's across both private and REIPP. And then I think the tender needs to be reworked. You know, it was great at one point in time, but hasn't really evolved with the market. Hasn't taken into consideration market conditions. We saw that in round 6, you know, where the amount that was actually awarded was a fraction of what was actually meant to be procured on the back of grid constraints, which was known at the time. And had the tender contemplated that, you know, maybe being location specific, you know, that all could have been resolved, and we could have had more megawatts on the grid at this point, you know, like, or at least a plan to get more megawatts on the grid. And I think that's already been well covered. You know, on the private space, I think we've done a lot of work. You know, if I look back in the last 5 years, sort of 6 or 7 years ago to the last 3 years, the amount of RFPs that we've seen in the last 3 years is testament to how far we've come, you know. But I think there are a few things. The deregulation has done wonders. I think that's been a big driver to private investment, private procurement. And then I think the economics behind private power has been a fascinating one, and I'll touch on that a bit. But I think what we could improve is sort of understanding of the wheeling framework. You know, like I think traditionally wheeling was something that was not really understood well by industry players. And if you didn't really belong to Eskom or the grid access unit, it's not something you knew, you know, offhand. But there's been a lot of work here. I think the industry bodies have done really well in sort of educating the industry and, you know, municipalities in particular, because it has a, you know, using municipality network here. So there's always that concern that wheeling's gonna eat into revenues. And I think that education has happened. But I think what would expedite private procurement even further is if there's a standardized sort of wheeling framework across municipalities. And I understand there's a lot of work being done there, but I think that will be a key driver, you know, to sort of opening up or scaling up private procurement. I think the trading and aggregation space is exciting because it opens up a world of universe, you know, a universe beyond sort of the high energy intensive users and guys who want contract flexibility. I also think Don touched on this earlier. I think the traders, what they offer is interesting in the sense that, you know, they buy long and sell short. So they buy you know, power over 20-year PPA from a generator. You know, they then so you get that pricing benefit, and they pass that tariff on to the consumers, but only sell them over shorter contracts. So you get both the tariff benefit, but then you also get contract flexibility in the sense that you can enter into a shorter dated contract. And that opens up a lot of corporate SA, because not everyone wants to be locked into a 20-year contract. You know, and I think once that space scales up, we've already seen, I think, you know, like PowerX was the name that everyone knew. And I think over the last few years, there's three or four new trading licenses being issued. And there's more in the works. You know, we've seen Discovery Bank come to the market. I think there's a few other players who are looking to get licenses. And once these, and there's enough for everyone. And I think once these guys get their licenses and there's a energy trading market, that's exciting, right? And that's going to open up a whole new world and really scale up private procurement substantially.
Great stuff. Thanks,
answer the questions.
Yeah, thanks for your input. Yeah, valued indeed. I think a couple of the listeners will be very interesting to see what happens in future on that. Anthony, maybe over to you, just to give the participants a quick overview as to how BDO BS&O division can assist and are assisting the guys at the moment within the renewable energy space. I am conscious of time. I know we're running a bit out of time. For those that can stay, please do. If we are needing to end the webinar with all the questions and Q&As, we will give that to the panelists and we'll be sharing that with the participants directly. So don't worry if we missed your question on the chat. We will get back to you directly then and just answer your question. We'll also share that on our page. Please go and like and follow the page. The link has been shared in the chat, and you can also get the webinar there, and any Q&A that has been answered will be posted there. So maybe just as closing, Anthony, over to you. Just chat to the guys about how BDO is assisting and can assist the guys in their renewable energy endeavors.
Thanks, Nato. I'll slip in over the finishing line there quickly. Just to say really that BSO, which is Business Services Outsourcing, really got involved in the renewable energy space due to the nature of renewable energy and the way that corporate structures are set up. So it was really delivering a solution, and it all started probably 10, 12 years ago when international companies were coming into South Africa. Started off with a couple of EPCs. As you know, the contracts normally lasted 12 to 18 months on a typical project. If they didn't have more than one project, they weren't sure how long they would be in South Africa, and they weren't sure what kind of support structure they needed. So generally, what happened in those days was that the international companies would outsource all their back office, which is finance. It started off with the basic accounting services, payroll, reporting and compliance. But effectively what happened as we grew with those companies, you would find that we could be flexible in providing other professional services. So it would involve tax, it would involve dispute resolution with SARS, it would involve maybe certain legal aspects, HR, and various other corporate compliance matters. So suddenly we became this one-stop shop to these companies. And the fact that they were international companies coming in, they felt comfortable outsourcing all these services to a good and reputable firm like BDO. And what we've seen over the years is as the industry has developed and grown in South Africa, there are more and more structures and group entities within South Africa that are creating JVs. And, you know, it's quite typical to have these large groups with multiple SPVs. You've got various stakeholders, you've got the financiers, you've got the communities, you've got group companies, holding companies, subsidiaries, etc., etc. And generally, when they create these JVs, the independent venturers don't necessarily have the capacity and resources to deal with the admin, the backup, back office and finance areas. And that's typically ideal to outsource those services. And the great thing about the BDO sort of one-stop principle is, as I say, as and when we need other professionals, we pull them in. So the advantages are you get a reputable firm, great quality, you fix your cost in terms of your core services, and as and when you need additional professionals, we pull them in on agreement and deliver an amazing service. And we've grown nicely in the renewable energy space due to the nature of the business, both ours and the industry. Thank you.
Thanks, Anthony. I think probably just from my side, for everyone might wonder where I fit into the picture. Also involved in the renewable energy sector from a corporate finance and from an auditing perspective. We will be sharing our contact details in the chat as well of all the panelists if you want to contact them. We will also be sharing the contact details on the page if you can go and like that. And thank you for all the participants that staying on a bit later. I know we're running over time. We all have meetings back to back these days, so thank you for the extra time. I think probably on that note, I don't want to keep you any longer. All the guys that ask the questions, don't worry, we will get back to you. We will address your questions directly, and we'll also post the answers from the panel on those Q&As on the page. If you just go and follow that page, and you can view the answers there. Then I would like to ask all the audience that attended the seminar, please give us feedback. We always like feedback. There will be a survey posted. If you can please go and complete that survey, that would be much appreciated for our next session. And we'll definitely keep you guys in mind in hosting our new session in the new year on a couple of new renewable energy topics, and we hope to see you then. I just want to say thank you to our panelists. You probably will see them again. I mean, with all the vast knowledge they have, you cannot ignore but to invite them back. So Don, John, Yassine, thank you very much for your time. Thank you for your insight. It was very fruitful, and I hope really that the audience enjoyed our feedback and our discussion today, and looking forward to our future engagements.